CNBC TV 18, celebrating 16 years of business leadership. This is Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me Reema Tendulkar and Anuj Singhal. Well, it's not as pleasant as it was yesterday. We were prepared for the worst yesterday and we got green all over. Today, the green tide has ebbed.
Yes, indeed, Lata. Hi, Anuj as well, and to all our viewers, a very good morning. We've come to Friday. The last 4 days have been good. We practically made a double bottom around that 75-50 mark earlier in the week, and since then we've rallied close to about 300 points. But Lata, looking at the global cues this morning, US markets were down close to about 1.5%. Does it look like the party has ended? Because crude continues to extend its slide.
That's my big fear, that after celebrating the end of uncertainty, is the market now thinking that we have to worry about what we have to worry? That Janet Yellen is telling you that she's going to be very frugal in rate hikes next year because she sees a problem in the market, and that is very evident in the crude markets. Crude, of course, has its own inherent supply problems, but it is also reflective of a demand problem, and that's why you're seeing a decent amount of red on the Dow Jones, on the Wall Street indices, as well as in early Asian indices. Our own rally yesterday was quite clearly a very sharp short covering rally. Either people were sitting short before the event or they were sitting light before the event. So after the rate hike and its inherently dovish language, people rushed in to cover shorts or to take positions because they were sitting light. And it was very obvious from that excellent FII number that we got of over 600 crores. But the question that we need to ask now is that do the old fears return? There may not be big FII sales, but I would still wait to watch whether that FII number will get repeated, whether people will continue to buy. We may still avoid the 7,500 mark because we have just 4 more trading sessions for the year to end, and there could be a little bit of NAV-related buying. Also because mutual funds are in the money, so they will be able to prop up the indices, but the danger of falling has not clearly gone away.
Okay, so let's ask this question to Anuj. What happens here on? 4 good days on the trot. It's largely short covering. How much higher do you think the markets can go, and what should the trading orientation be?
Morning, Reema. You know, yesterday I was telling Sonia in closing bell that expect a large FI buy number in index options. And, you know, yesterday's rally was entirely short covering, or at least 80% short covering. Test of markets texture is today because 78.25 was the level that, you know, Lata, you'll remember I was watching out for. That is really the first important resistance. We are practically there, and it looks like this morning the SGX Nifty is indicating that we'll be below that. That's the first big resistance. And my sense is that, you know, short covering rallies are normally powerful. They come in a burst of 3 or 4 days, and they normally make you feel like good. You know, they make you feel like, you know, the market has the worst behind it and now it's ready to move on. And just when everyone starts to think like that, the market, you know, gives you a snap back. And that is what could happen in trade. Of course, the big point still would be that whether the double bottom is indeed there. Reema, the double bottom also, you know, needs a bit of a testing. It's not that, you know, just one day you go there and then you move on. You know, at times you require a test of that bottom again to see if that is indeed a bottom or not. I would look at the DISL number very, you know, closely because normally in a market like this, the DIs have a better sense of the medium-term direction of the market. They have been buying at every lower level. And yesterday, there was actually a sell from DIIs. And my sense is that the sell would have come in some of the vulnerable stocks, which we'll talk about in a bit. Till 8,000 is crossed, this is a market which is a sell-on-rally market. This is a market which is essentially a counter-trend. This is a rally which is essentially a counter-trend rally. And if you look at the FI number again, they sold in index futures about 520 crores, and that's because they unwound long positions. You know, you'll remember some punting positions were taken ahead of the Fed event, and those were unbound. If you look at the index options, 7,300 and 7,400, even 7,500 puts were covered, which is to say that, okay, the downside may not be there till 7,400 or 7,500, but even the upside is capped in this market. My sense is that this is a market in which all rallies are actually exit opportunities, especially in high beta names, and I won't be surprised if closer to expiry, the market has one more downtick left. This market has one more downtick left in it, whether it's at 7,500 or 7,400. One more down take is left, and then maybe the market can move on.
Okay,
And
but is expiry day the last day of the
Expiry
year
day
as
is the
well?
last day of a calendar year, and
So you may want to
31st.
prop up things?
I don't know. I mean, see, I'm not an expert on these things, so I won't like to, say much on that. My only worry is that this is a series in which smart money has made a lot of money by shorting at higher levels and then covering, and they have an ammunition now to again short. So if I have to stick my neck out and say what would be the picture on 31st, I would say that Nifty being closer to 7,500 is a higher probability than Nifty being closer to 8,000.
Okay, at least this morning, the cuts in Asia are not as deep